Behind the Markets today. Of course, it is the 21st of February 2023. Of course, we are live on social media as well. For those of you who are, who would like actually to follow us as well and just be part and parcel of a conversation. Mutwale, how are you today? I'm not sure if Mutwale is able to hear me. All right. We'll be getting to just connect with Mutwale just about now as we just get to the conversation, of course, online and pretty much on social media in case you're just following. Mutwale, you hear me? Okay, seems to be having a challenge, connectivity challenge. But of course, thank you so much for those who are able to, join us this morning and just be part of a conversation. Priscilla Zulu, thank you so much, and happy Tuesday to you too. This, of course, is Behind the Markets today, the 21st of February 2023, just to really get into what is obtaining on the ground this interesting day, of course, and what is, of course, just happening today. Very interesting scenarios coming through this morning, of course, just to look at some of the, intriguing aspects. Mutwala, are you able to hear me? Okay, Mutwala seems to be having a bit of a connectivity challenge. But of course, we should be able to have him later on, in the program. But of course, as you may know, that we have, a diverse look at just ideally what is happening in the Zambian economy and what, of course, has, triggered some of these interesting, changes and moves, especially by the regulators and the authority in general, especially that we also have the central bank. Hi, Mtwale, are you able to hear me?
Yes, but unfortunately, we are having a bit of a tough morning on this side. I don't know if this side that all of our. So yeah, I think we're just having a little bit of networks issues. But yes, I could get you towards the end. I'm not sure if you can actually get me at the moment, but okay. I'm not sure if I'm stable right now. We have a little bit of an unstable connection.
I can get you. Okay. Well, you never know. I'm sure he'll be able to just join us back momentarily. Issues of connectivity challenges and whatnot. So of course we're looking at interesting aspects as of yesterday. Just what exactly is happening and what's been obtaining of late, and pretty much that everybody's talking about the policy, the monetary policy that the Bank of Zambia has put in place, of course, with an interesting increment from 9.0 to about 9.25 percent, of course, and how that just is going to affect a lot of things around the economy to start with, and in general, in particular, consumers, young entrepreneurs, small medium enterprises, trickling down to interest rates, how much you can borrow, and what will be the interest like, even for businesses as well, if they are borrowing, how much of a hike is there going to be with this particular monetary policy rate, of course. Some economists have come on board just to support that particular move, but Bank of Zambia to increase the policy monetary rate. But yeah, we would equally have had more news coming through and more people just coming to the scene, not really siding, but rather criticizing the move and increment by the Bank of Zambia to just ideally increase from 9.0 to about 9.25%. Of course, anticipated by some economists already, even before the hike was made. But of course, to push that out just to zero in on how that is greatly affecting so much and how, of course, the economy is going to be, performing with that particular hike. But of course, we see that the Bank of Zambia is, I want to believe, of course, that, it is putting all that it can just to see that we can find ourselves in a more stable, economic situation, especially the inflation of the rate that, we have been, grappling with, in the recent past. Of course, we've seen that just as of yesterday, we had an interesting scenario of how the currencies, of course, were performing. We had at least a scenario of the dollar at now 29 ngwe and selling at 19 kwacha 67 ngwe. That was as of yesterday. But then, of course, in recent reports, of course, of just how the dollar has been depreciating in the recent past. Okay, we should have Mutwale back on the panel. Hi Mutwale, can you hear me now?
Yes, I can, and hopefully I think we are stable. Unfortunately, all networks have decided to act funny today, but that's life in the morning. This is what we all have to prepare ourselves for. But yes, just getting into today for the purpose of catching up today, getting into today's data, let's get into the market roundup in terms of our FX markets. It's today marks day 96 of the Kwacha sell-off. We've actually seen 96 consecutive days of the kwacha losing value against the United States dollar, down 0.23% yesterday and down 7.89% as of year to date from the beginning of the year. So the kwacha has lost 7.89%, or the dollars have become 7.89% more expensive than they were at the beginning of this year. And we are seeing that this has continued. In fact, if you take a look at the chart, on the 21st of December, actually this time, the kwacha was 17.86 and now a 19.52 on the interbank rate. That just shows you how much of a huge movement we're looking at, man. And that's almost a whole 2 kwacha worth of dollars in terms of the price of dollars gone up. And that's a very, very strong inflationary push. That's over 10% in the value of the currency gone. Just in this brief period. But we have seen the Rand is still holding up flat. It's been a very flat period for the Rand year to date. Rand is 0.88. Obviously, it's in a state of emergency due to its electricity and its poor economic management. But it's still stronger than the kwacha. 1.0774 is the price. Yesterday, it did move up by 25 basis points, and it is up only 0.88% to the year. It's in a selling pattern, but it's only on a 2-day winning streak. But it's not as bad as when it comes to the kwacha itself. So when it comes to the dollar. Now, when you go into the bond market, in terms of our secondary bond market, we do see that yesterday we did see 0.16% up on the local currency bond index at 979.95. And we've seen that it's up 4.26% year to date. So we're still managing to just shave off inflation in terms of real return on bonds at the beginning of this year. Obviously, with 11% inflation expectation, this is actually
All right. Still getting a bit of a challenge there with connectivity with Mtwale. It has not done him good today, unfortunately. Hi, Mtwale. Glad to have you back.
sorry, Vernon. I've got like 3 different networks here, and they all decided to act funny today. I got like 3 different networks here. This is just the mess that is our telecom set. It's a mess. I'll tell you that. Absolute stinking mess. But anyway, let's continue going. If we continue here, we do see that the in kwacha we are down on the bond. We are up on the bond index, 4.26%, and we're shaving off inflation. But against the US dollar, in terms of US dollar value of bonds, they're down 3.37%. This is for the offshore investor whose investment is down 3.37 in terms of investing in bonds. In terms of in trading bonds on the secondary market, down 0.07% yesterday, mainly because of the loss in the currency. The interest rate is back down a bit to 23.55. It did dip momentarily, but it's back up at 23.55 from the beginning of the month. And that is the interest rate sitting on the bond market.
All right, just lost Mtwala there for a bit once again. It's gonna be an interesting one from Mtwala today. All right. Wow. We hope we can have it back momentarily, just to really finish up on that particular segment, so we can get to have a look at the next one. Coming up still on Behind the Markets. Thank you for those of you who are just joining us. This is of course Behind the Markets, coming to you of course every single morning. And of course, we pretty much go live on social media, Twitter, Facebook, as well as Instagram, in case you're just listening in. But alternatively, you can still, catch us on the frequency 93.7 FM. And alternatively, when you download the mobile app on your smartphone, that is, of course, Money FM Zambia. For the website, of course, www.moneyfmzambia.com. You should be able to, get us live on the website as well, and just, catch up with the interesting news items, especially around the economy. Hi, I'm glad to have you back again.
Yeah, it's trial and error today. It's trial and error. Let's see if they're gonna try and get this still today, or if we're just gonna be playing Mexican jumping beans all morning. But yes, we are seeing that our exchange, our interest rate on bonds is still sitting somewhere around, or our yield rate on bonds is sitting around 23.5, but the rate is starting to come down. Although in the last auction we do see a little bit of upward pressure that did push bonds up. Now, in terms of our commodities, copper is up 1.49% yesterday. We did see a stronger market because we are seeing that the Panama, there's debates happening between Panama and First Quantum, which is slowing down supply. Remember that Cobre Panama is the biggest First Quantum mine when it comes to copper mine. When it comes to copper, and we saw that copper did fall a little bit yesterday, but the red metal is sitting on strong gains of the past week amidst optimism of the potential recovery of China. And then obviously supply disruptions in Panama has cut off a lot of supply from the global economy. So that's supporting a stronger price coming out this year. So copper is up copper is up 1.49%. I think we saw the impact of a bad copper price. We're just waiting to see if our mines are actually going to start pushing out output when it comes to copper itself. I will be waiting to see if that actually turns out anything. Obviously, we'll probably be getting our trade data by the end of this month, by the end of this week. We'll be getting the Thursday trade data, so we'll be able to see whether they're now increasing their output on the signs of some of these stronger prices, or whether they're waiting for a global recession to pass. The other part that we're seeing is oil is up 1.24% yesterday. A few supply concerns on the oil market. Analysts expect China's oil imports to hit record highs in 2023 to meet increased demand for transportation and new refineries that have come on stream. So they are expecting that China is going to push up the oil price, and expectations is that we could see $100 oil price by the end of the year. So we really need to get our currency down, or else we're going to start seeing some really drastic problems here. You want to know how drastic? Right now, Vernon, we're already looking at a 28.16 kwacha bump up, 28 kwacha 16 Ngwe oil price by the end of the month, with an expectation of a 3.37% price hike on fuel by the end of this month, which will probably put more pressure on transportation services. We saw that the public service transporters actually had to raise their fees last month. It'll probably trigger another one because already they're at the end of their rope. So we're expecting a 92 Ngwe rise in the oil and the pump price by the end of this month. Now, there were obviously conversations yesterday by our energy minister, who did say that Ndeni is going to start blending, the blending project, where Ndeni will be buying semi-finished product and then purchasing locally produced ethanol from companies such as Sunbird Energy and Zambia Sugar, who make molasses and make it out of cassava, to help support the agricultural sector, but then to feed that into the fuel economy. Although I think this is also an opportunity once again for the magic plot of industrial hemp to also feature in all of this. So all of this will be able to build up. We're probably going to see that there has to be a standoff in terms of the supply chain, in terms of the FX rate, something has to give, because upwards momentum is what is picking up the oil price, because the number one thing that pushes oil prices up is China demand. As long as China has high demand for oil, oil prices go up. Russia also plans to cut supply by 500,000 barrels per day, equating to a 5% cut in output in March, after the West imposed price caps on Russian oil. So this is their retaliation to then push the prices up globally by then taking 500,000 barrels of Russian oil off of the supply this year. So the combination of Chinese imports and recovery coming in, plus Russian oil supply cut, will actually now lead to a higher price. Yesterday, by the way, marked the 1-year anniversary of the Russia-Ukraine war, as we saw President Biden actually go and visit Kiev yesterday, just to mark the occasion. He actually went into a zone where there wasn't even U.S. military presence. That was actually the shocking part of the visit yesterday. So everything is actually pointing to the fact that this war is not letting up. President Putin is not letting up anytime soon. They were hoping he would have. All this pressure hasn't really let off in any way. Ukraine looks like it's just going to be a war zone, like some of these countries like Syria, Afghanistan, for a long time, the way things are going. And that's going to dislocate a lot of the energy prices for some time. So Zambia has to prepare itself for energy price inflation. We actually have to prepare ourselves, because that is actually probably going to continue and prolong for quite some time. Other news we're seeing yesterday was gold hovers around a 6-month low, as there's uncertainty about interest rate hikes on the Federal Reserve, and gold marked its third straight week falling. It's falling sharply to after hitting a 9-month high this year. As overheating inflation regarding signs of a strengthening U.S. job market indicated the Federal Reserve impetus to keep rate hikes going. So, in other words, the interest rate market, gold is actually reflecting that the Federal Reserve is going to continue hiking interest rates. The minutes of the Federal Reserve also, which came out on Wednesday, which are also due on Wednesday, and the central bank has largely maintained its hawkish rhetoric during its meeting. Even as it raised interest rates by a relatively smaller margin of 25 basis points, it seems like they're going to continue down the rank. But yesterday, gold was up 0.53%, but it's down. It's only up year to date 1.31%. A lot of the gains have been wiped out. On the month, it lost 4.44%, and you can see gold in kwacha is up 9.3%. But the performing parts of the economy, performing parts of the year to date returns of other parts of the economy is the crypto market. That's up 53.55%, with Ethereum up and Bitcoin up 61.37%. There was a meeting recently between Vitalik Buterin and our Ministry of Finance, Ministry of Science, and they talked about how cryptocurrency is a potential game changer for our global economy. I mean, it is for our Zambian economy. And the reason I would say it's a potential game changer is not because cryptocurrency as an asset, but cryptocurrency as a technology. Blockchains and decentralized finance and decentralized applications is actually one of the things that helps a decentralized economy. Zambia is in turn a decentralized economy. Marketplaces, small businesses, self-employment. There's a lot of decentralization. If you can even see, even in our financial sector, the mobile money rise has actually been banked on the fact that Zambia is a strongly decentralized community. So we actually are able to see that right now for the moment. But please be always warned, people, cryptocurrencies are extremely volatile. I only ever advise them as part of what I call a wealth insurance portfolio. Should never really exceed 15%. Just something that in case there's a broad market downturn, it can counteract, just like it's doing right now. Stock market is negative. Bond market is barely above inflation. While you're seeing anything else like gold, that is the only thing that is holding above. It's only dollars and crypto. Those are the things that are performing relatively well. It's dollar-based assets at the moment. So holding USD, cryptocurrency, and gold is just about a 15% of your portfolio. That should be able to now cushion any losses that you see. The volatility in those three should be able to cushion any losses that we see on the market. But main thing I would point my finger at right now is that we are expecting a 92 where price hike on fuel today coming up next week. When we do get news from the ERB about what the March prices will be, That will be our expectation. I repeat, a 92 Ngwe price hike is probably in our calculus with day 21 of the month. This is usually when they start to do their calculations. So we are seeing that today it is pointing in that direction. Now, looking at the economic calendar of events, of data and events. Yesterday was a relatively quiet day because it was President's Day in America. That is also one of the reasons President Biden did travel. Yesterday was a holiday, so we didn't see much in terms of data being released. It was Washington's birth. But the pieces of data that we did see come out, construction data came out 2.5%. Construction data came out 2.5% in contraction in Europe. So we're actually seeing the Europe construction economy coming down. That's also not good signs for copper in general. 12-month German auction. Okay, the German auction for 12 months came out with a 3.12% up from 2.723%. We are still seeing upwards interest rate pressure sitting in Europe. Turkish debt stock moved up. Turkish government debt stock came down from 4 trillion to 2.7 trillion. That's a massive drop in terms of their government debt stock. And consumer confidence in Europe has actually dropped. Is still in the negative, but less of a negative than last month. So we're seeing growth expectations still having a problem. Now, Japanese PMIs manufacturing still in contraction, 47.4. So that negative activity in Japan means that the central bank in Japan is highly unlikely to start raising interest rates, because they still have a weaker manufacturing sector that they need to bolster. Service economy in Japan is up, is showing that the PMI is at 53.6. You can see these Asian countries are starting to shift a bit out of manufacturing and a lot more into services as they've gotten richer. This happens to many nations when they become middle class and they become wealthy. They start to transition towards doing things in terms of the service sector, and that's what most developed economies actually go for. While developing economies or more poor economies focus on agriculture and industrial activity, because they're trying to put as many of their people to work. Now, taking a look at what data we should be expecting coming out of today, it is Youth Day in Zimbabwe. Where there is a holiday this side, but main things and Carnival in Brazil. So go have fun there. Car registration numbers to show how strong the auto sector is actually doing in the UK, while also car registration numbers in Germany and also in Italy, showing the auto sector strength. That data should be coming out today. German PMI is expected to come out today. European PMI is expected to come out today. British PMI is expected to come out today, with also unemployment data coming out of South Africa. Fourth quarter 2022 unemployment data is expected to come out of South Africa. That's going to be good to see if the economy is actually growing that side. We're also expecting to see sentiment data coming out of Europe and Germany, while retail data coming out of Mexico, and mainly inflation data coming out of Canada, with PMI data coming out of America as well. So today we're going to be looking at manufacturing information. This is going to give us some data coming out on how copper prices should be doing. So that's going to be the main point of today's data. But however, four horsemen are basically pointing at interest rates, and inflation pressure is still rising, especially due to the energy sector. Interest rates are still on the rise. So in as much as we're hoping that inflation could contain itself, it seems as though energy inflation could actually start to return back into the fold, while interest rates are still picking up in every other place. The expectation that they're coming down might take a little bit of time. As you saw, even the German interest rates are still coming upwards. Other pieces of data that we'll be paying attention that have shown how the four horsemen are doing is that growth data is still soft. Especially European growth data, while industrial data is still showing signs of weakness with the poor construction sector coming out of Europe. So weaker signs of growth in the industry, while we're seeing higher pressure coming out of interest and inflation. It is still looking like the fixed income market is your due point. If you want to start making financial decisions, please make sure that you're looking at where you're multiplying money and where you are placing your money. Now, hopefully that should give us the segue into today's conversation, which has to do with the make money equation. We're still talking about wealth, by the way, as we're going through this year. But today we're talking about wealth through income generation. And today I'm going to talk about something that I talked about on Sunday, and I'm bringing it back. I know that a question was asked about it yesterday: high productivity, high performance, high proficiency. So the the part that I want us to talk about is how people who actually build wealth through doing things they do well. Okay, so this is a conversation we kept seeing yesterday, and I'm going to recap two videos that we actually saw yesterday regarding a conversation about how wealth in general is built. And a lot of confusion comes up to the fact that, well, not really confusion, let me not use that terminology, but a lot is assumed that wealth is built by doing multiple things.
That I've been doing this is most people make great sums of money by doing one thing really well. And when they master that one thing really well, like maybe running the largest and most successful private equity firm in the world, nobody can beat them at that. And that's the way they make their money. Then to keep their money and continue to grow it, the trick is diversification. Diversification comes with having to master lots of different things. And generally, people find it hard to master lots of different asset classes, sectors, countries, areas to invest, because they don't have the time to do that. And so being able to get other people to help with those components, maybe it's just the ones you don't master, maybe it's all of them, maybe it's components of that, is the way most successful people have done.
So that was
that I'm an evil capitalist. I don't make any bones about it. I'm not ashamed of making money. It's very hard to make money.
Can I ask you bluntly how much you make?
I make $80,000 a month on Patreon. My book is selling about 20,000 copies a week. I have royalties that probably amount to something approximating $1.50 on each of those. The tours garner about $35,000 to $50,000 an evening. I have a business that's generating something in the neighborhood of $200,000 a month for me personally. There's some other smaller sources of income than that.
You are making a lot of money
Yes,
out of this.
I certainly am.
okay. So those were two videos which I actually just wanted to recap from yesterday. The first one was Mary Callahan Erdos, who is the head of JP Morgan Wealth Management, which manages $3.1 trillion. You heard me, people. $3.1 trillion, and is one of the biggest wealth managers in their country and probably even around the world. They've got offices everywhere. And what she's telling you that in 25 years of wealth management, what she has seen is that most people make a lot of money doing something very well, not many things very well. So this is usually a problem that a lot of people have because we're usually in a rush to get rich. We try and do as many things and have a lot of spinning plates happening around us. And instead of actually trying to focus on areas where we can improve our value. The second video was Professor Jordan Peterson, who was actually explaining his income streams. Now, everyone heard that he has multiple streams of income. So a lot of people confuse multiple streams of income with having to do multiple things. But what Professor Jordan Peterson has actually done is he's created multiple streams of income doing one thing. Okay, he is a clinical psychologist. And as a clinical psychologist, he can run training programs. As a clinical psychologist, he can write books in clinical psychology. As a clinical psychologist, he can have online courses, which he sells. As a clinical psychologist, he's able to do speaking tours. So a lot of these things as a clinical psychologist are able to make him close to anywhere from $300,000 to $500,000 per month, according to my calculations. So if you look very carefully as to what he's actually telling you, is that he's using one skill in many ways. And he actually talks about this himself, that a lot of people make the mistake of diversifying themselves instead of diversifying the applications of their skill. Okay, so this is where the debate about jack of all trades, master of none, and everyone wants to be a jack of everything and do 10,000 things very well. You're not going to be able to do that because you have to, in order to become proficient at something, you have to put thousands of hours into it. You have to network deeply in it. So today I want to talk about 3 different models of becoming very proficient at something so that as people go out there and start to look at the equation of how to build wealth, remember, number 1 is making money and being aggressive about it. Now, the Fidelity study on millionaires, the 2014 Fidelity study on millionaires, which I always put aside next to the Ramsey study and the Ramsey study on millionaires, 10,000 millionaires, and the Millionaire Next Door profile, the interviews that were done. Fidelity, I kind of rank them as the highest because Fidelity has the highest database of millionaire clients. And one of the things they found is that millionaires are revenue aggressive. They're income aggressive. They grow. They don't just look at growing their investments. They look at growing their earnings capacity aggressively. So it's a combination of aggressive investing with aggressive earning that often aggressively builds wealth. So you've got to be aggressive on both fronts. Okay. The only problem is aggressive earners often are aggressive spenders. That's usually where the problem starts to come in, because there's a personality trait in when you look at Know Your Money, Know Yourself, which actually lines up that people who are aggressive earners tend to be aggressive spenders. So it requires that self-discipline to earn to a certain point. That's why Grant Cardone gives what he calls the 40% rule. And he says after taxes, if you're living on, what he calls the 40% rule, but I've changed it to the 33% rule because there is an adaptation he's supposed to make. After taxes, basically to say that net of taxes, you should be living on 33% of what you make. That is if you're an aggressive earner. And that just tells you that if you want to live a lifestyle where you are spending 20, 30,000 kwacha a month, then you have to make 3 times that so that you're building wealth aggressively while living that lifestyle. So however much you want to try and increase your living capacity, you have to then triple. You have to go 3 times that in terms of your earnings capacity. So now how do we talk about making sure that a person has high earnings capacity so that they can allocate wealth, they can allocate assets while living the lifestyle that they want to feed that aggressive nature? So if you find yourself being an aggressive spender, just know that you as a person is the ability to be an aggressive earner, but it's just maybe you may not have tapped into it. So the first thing I want to touch into, there are 3 models I'm going to touch into. The first one is the productivity model, the personal productivity equation, and I'm going to break down through it. And then I'm going to go through the personal proficiency equation, how you become proficient. That's the Booker T. Washington 9 Steps to Mastery. And then I'm going to talk about a model that was actually done by Mr. Andrew Chibuya. That's called the high performance equation. So there are 3 equations and processes I want you to try and take note of today, and I'll try and throw these onto my page today for everyone to try and get a hold of. But this is stuff you want to take notes of. So if you are listening, if you are watching on Facebook, give me the old writing emoji that you're actually taking notes on this part. So let's go through number 1, the productivity equation. Okay, so we're going to go through each of these possibly for about 3 minutes or so. This is the productivity. The first one being the productivity equation. Now, this is math again this is high school mathematics again. I apologize for those who are not comfortable with it. But effectively, this personal productivity formula looks at how far you make, how much progress do you make in your work in any given time. And it's going to be broken down by 3 things. The letter D there stands for productivity. Daily progress made towards attaining a goal. So maybe you want to attain a goal of writing 100 articles in a year. Maybe you want to attain a goal of making X amount of sales a year. You want to do something, but you want to try and look at what goal you are and how much progress you're making towards it. And that is broken down by 2 variables, small v and big T. Okay, small t. And now let's start with big T. Big T equals time. This is the cumulative time that you spend working on something, and that can be broken into what we call focus sessions. The number of focus sessions that you have. Now, a person, there's a principle called Pomodoro focus sessions, where a person can break their work down into 25-minute sessions of deep focus. Okay, so it's advisable to go 25 minutes deep focus, 5 minutes break. At best, 20 minutes, 10, but the breaks can be a bit too long. So 25 minutes deep focus, 5 minutes break. 25 minutes deep focus, 5 minutes break. When we say deep focus, we mean phones muted, apps off, block every application, and you're just focusing singularly on one task. People usually make the mistake of is they go over the 25-minute barrier on this one. So whether you're writing an article, whether you're working on something, whether you're practicing a dance move, whatever you're doing, 25-minute sessions of deep focus are really your highest level where your mind can engage almost uninterrupted. But you need to create that environment also. Lock things, block things, put focus music on. Do what you need to do to block the world out. So the first thing you want to do is you want to have about a number of those. Now, it is not advised to go beyond 4 of those at a time. So in other words, 25, 5, 25, it's not advisable to go beyond that, because after that, you need to take about a 20 to 30 minute break to just declutter your mind. Plus, you should never do one single project more than 90 minutes. In other words, 3 of those sessions on one single project should never be done. Maybe if you got 2 projects, maybe give yourself 2 of those. Now, I'm going to mix this with what we call Robin Sharma's productivity formula. Robin Sharma says that for 90 days, focus the first 90 minutes of your life on the biggest opportunity in front of you. So give these sessions, in other words, break 3 of these sessions down, 25 minutes, 5, 25 minutes, 5, 25 minutes, 5, put it down. For the first 90 days, do that. Okay, 90 days, 90 working days, do that. And you'll probably see that you'll touch on as many of those things. And then he also talks about, then the other thing is also the amount of time. Now, usually it's not advisable to go beyond 30 minutes. As I said, 25 minutes, 5 is the advisable one. Other people use 20 minutes, 10. 20 minutes on, 10 minutes break. But find the optimal combination, which leaves you with minimal burnout and at least 25% of your brain energy. Remember, your brain is the biggest consumer of food in your body. Okay, so whenever you're doing mental work, you actually tire yourself very easily. Okay, it consumes a lot of energy. Your brain is a processing center that consumes a lot of energy. Now let's look at little v. This little v is the most important part because it's broken down into 3 letters, DLY. Okay, and this is how you become productive. V stands for the speed, efficiency, and proficiency that you do your work. Okay, so in other words, I can sit there with a basketball and I can try and take 3-pointers, and I'm not going to make as many. Steph Curry, on the other hand, is going to sink a lot of them because he's naturally proficient in these areas. He's practiced and he's talented. So you've got to first discover, where are your natural gifts? So there are three things you need to discover about yourself to be highly productive. The first one you need to discover is, what is your vision and what is your values? What are the things you value a lot? What are the problems in society that tug at your heartstrings? Because those are the things that will energize you to do something about it. What are the things that mean something to you that you are willing and especially even angry about? So values and vision are usually the best things that you want to try and build about yourself. That is big letter D. That forms your direction. It's like the finish line for a 100-meter sprinter or a race car driver. What is the thing you want to get up to that means so much to you? Like, it doesn't mean so much in terms of what people will think of you. Personally, it means so much to you. It's called the direction of your work. And the direction of your work is purpose-driven, and it generates your energy levels. So if you have managed to build purpose into your work, meaning into your work, and the best way to build meaning into your work is to do something you're good at for the purpose of something that people need. So something that is relevant to people, but you are confident you can execute it. And that gives you the second letter, which is L, your stride length. Now, no matter how much I try and train for a 100-meter sprint, Usain Bolt has longer legs than me. No matter how good I get, he's always going to have the advantage that he's really fast and he has really long legs. So stride length is your natural talent and your skills. Now, being skilled is this. What are you naturally gifted in? Okay? What are you really naturally gifted in? And then have you sharpened that axe? So there's that old biblical saying of sharpening your axe. So when you focus on a problem, so the direction will aim you at a problem that means something to you. The stride length will give you a skill that you are confident you can execute consistently. Okay, so when you look at it that way, that's your gifts, your natural talents that you have trained and practiced and become certified. Now, I want to just tell you something very quickly about this area. When you're trying to improve your skills in your area of talents, what you want to do is start by imitation. Okay? And I know this sounds a bit wrong. What my advice to most people is, list the top 10 people you wish to be or surpass in your industry or in that sector. List them. Okay? From number 1 to number 10. Okay? And number 10 maybe should be closer to you. Who is closer to you? Start by imitating the lowest one. Imitate them to the point where then you can now start beating them at it. Okay, then find the next one. Imitate them to a point where you can start beating them at it. Then the next one. Think about this like a video game. When you used to play those video games, if you're young, if you're at my age, you remember games like Shinobi, okay, or Streets of Rage, or things like that, where you would go up certain levels with every single bad guy that you'd face, and there was each boss. So kind of line these people up by boss and learn, okay, what can I learn from this one? What can I learn from that one? Practice by imitating, recreating, and then you even start to become better than these people. Okay. Then finally, Y stands for your state of focus, deep focus, rhythm, flow. This is called flow state, where you are hard to distract. And this is driven mainly by the meaningness of your work. So the more meaningful your work is in D, that direction, the harder you are to distract, and the deeper your concentration levels are when you're doing this work. So this is what you want to try and look at yourself. Find a problem that means something to you, get into a deep state of focus, and sharpen the axe that you have, and then allocate focus sessions to it on a daily basis. And you'll probably find, whether it's social media marketing, whether it's podcasting, whatever it is, whatever skill that you have, you'll probably find that you get to such a high level of excellence that the value of your hour, the value of your work starts to go up. And you don't have to do too many things. There's a lot of value. While people are trying to make 8 kwacha an hour doing this, 8 kwacha an hour doing that, 20 kwacha an hour doing this, you're making 200 an hour doing one thing, okay? Because you've mastered it and you've gotten to the top of it. So let's talk quickly about getting to the level of proficiency. And I'll open up tomorrow about high performance. But this is Booker T. Washington's, the Booker T. Washington 9 Steps to Mastery, which I've put so much. In fact, just for the purpose of today, I'm going to skip that one because I've given this one out so much. But if we're talking about high performance, this is a strong equation that was actually created by Mr. Andrew Shibuya in a YouTube series he gave called the equation of high performance. And he broke it down into 3 things. And he was talking at an institutional level. But I managed to look at this even at a personal level, that from an institutional or a personal level, there must be a culture of high performance. Remember, a culture is the way you do things or the way a group of people do things. There must be high performance people. This is your personality, things you have to develop about yourself. And you must be high performance managers. So even the way you control yourself or manage yourself. So you can bring this from an institutional or an individual level. But when he broke down high performance culture, the way you do things is that 1, you must be results oriented. 2, you must be uncomfortable with the status quo. 3, you must be more focused on competence more than qualifications. And 4, you must take on responsibility before given reward. And then you overlay this by having an environment where you embrace free speech, you're open to people, and you're constantly evolving. That you can do as a person. These are cultural traits or behavioral traits you need to take on. As a person, in terms of your attitude, you must look at your attitude in a way that you must take initiative, take responsibility, and you shouldn't have to be told to do things. That's called being a self-starter. And then you have to overlay that by having strong tenacity and strong resilience, your ability to withstand pressure and your ability to be stretched without breaking. And then finally, this kind of gives you a personality of relentlessness, restlessness, innovation, and dynamism. So that is what will come out of you as a person. This is your personal development you have to work on. And then when you're talking about it in terms of high performance management, this is if you are working in an institution. This specifically would be if you're working in an institution or if you're being coached. You need to have high performance leaders. So who is leading you as a person? Are you under the leadership of high performance? Are there minimal barriers to your empowerment? Are you stretching your targets? Do you know your clear performance indicators? Do you know clearly what you need to do in order to get somewhere? Are you able to manage your expectations sometimes and be realistic? And are you able to communicate with people with the right mix of monetary and non-monetary incentives for your work? So whether you're working for yourself, you may even need to do this as well. So look at this as a high performance equation. So to be highly productive, you must be a high performance person who is then mixed with proficiency. And proficiency is the 9 steps to Booker T. Washington's mastery, which is build your knowledge in something, get a mentor, network in your local industry, practice extensively for 10,000 hours, the basics of your industry, learn the variations and specializations, travel to other cities and learn how they best do it, build your reputation, repeat all these steps from 1 to 7, and mentor someone. So for people who are looking at the earnings equation, this is what you need to work on. Work on these 3 areas so that when you are trying to apply yourself in terms of growing as a person, this is stuff I've had to start working on myself. And this is why I started to narrow myself down into specific areas where I have built mastery, I've built a name, and I'm now focusing intensely in these areas and then diversifying myself using that specific skill. But I'm sure the jack of all trades argument always comes in. And I'm sure you can point at an example. But from my experience, the people who are able to build astronomical levels of wealth or consistent levels of wealth have mastered the art of doing one thing very well. And with that, we thank you. We'll see you tomorrow as we break down some of the market dynamics. And we will be going through some more dates, some market data tomorrow before we get into the end of the week when we talk about entrepreneurial issues and having a wonderful week. We'll be talking about, obviously, the future of cryptocurrency, decentralized societies in the end of the week. So thank you very much to everyone who has been with us. I believe Vernon will eventually join us back. But thank you very much to everyone. Have a wonderful day, and God bless.